Hello students, in this video we will discuss introduction to income tax. In this video I have discussed meaning of tax, types of taxes, brief history of Indian income tax, terms referred in income tax. Now let us move to the presentation. Dear students, let us begin with the first unit of, that is introduction to income tax. Before starting this chapter, let us understand what exactly meant by tax. In a very simple terminology, tax is nothing but any payment made to the government. So here the tax is the compulsory payment made by the citizen of the country in lieu of general services. Say for example, when the citizens of the country are availing the various types of services, then we are required to pay tax to the government. And a tax is the major source of revenue to the government in order to spend for the public expenditure. Say for example, when we travel on the road, we need to pay the toll fee. It is also a type of tax. When we construct a house and the local authorities, they provide the various amenities such as water, light, street lights, then road, etc. So for that also we are required to pay municipal taxes. So anything which is paid by the citizen of the country to the government for the general services, such payment is known as tax here. Such taxes can be broadly classified into two categories. There is one is the direct tax and another one is indirect tax. Direct tax is nothing but it is a type of tax, the burden of payment of which cannot be transferred to another person. Say for example, when I earn an income, so that means I have to pay tax. On behalf of me, nobody cannot pay the tax. So such type of tax we call it as direct taxes. That means the one who earns income is required to pay the tax. The examples for the direct taxes are income tax. It may be like wealth tax. So such taxes, they're called as direct taxes here. And then the indirect taxes. Here the burden of payment of the tax which is shifted to another person or which can be transferred to another person. Say for example, when we purchase the product, the seller is supposed to pay the tax on the sale of the goods, but he is going to recover the same tax from the buyer. So we are paying goods and service tax, or it may be like, say for example, excise duty, customs duty. All these are the various types of taxes that are paid by the people. So here the burden of payment of the tax is shifted to another person. Here in this topic, in this subject, we are going to concentrate only on the direct tax, that too income tax only. We are not going to discuss the other forms of the direct taxes here. So now let us look into the brief history of Indian Income Tax Act of 1961. Of course, the concept of tax was there since its inception. During the king's dynasty also, the tax was paid by the people. Say for example, in 1800, when Sir Thomas Roe came to India during the Jahangir's dynasty, so he paid the gifts to the king in order to start the business in India. So like this here, it was developed. So first it was under the British regime, a proper concept was given for the tax. So and this act was subject to amendment. Why it was subject to amendment? Because there were many lacunas involved in the act. When people cannot have the income, when the people don't have the income, how the person can expect to make the payment of the tax? When you look into the status of our country, There are some places where there will be continuously drought, famine. So in such case, how the people of that particular region can pay the tax? Even you may be knowing a film called as Lagan. The Lagan is nothing but it is about the tax. So when there is a drought in the places like Kutch in Gujarat, and they were supposed to pay the tax, but when they don't have the income, so in such case they cannot pay the tax here. So here this act was subject to many amendments and which were not at all suitable to the Indian conditions. So finally the Income Tax Act came into force with effect from 1/4/1962. The act was passed in 1961 and it came into effect with effect from 1/4/1962. So now let us discuss what is this income tax then. Here income tax is nothing but the tax which is paid on by the person who earns the income. In other words, to say, any tax which is levied on the income of a person is called as tax here. Of course, there are many terms. When you look into the income tax here, so the income tax, it is a type of a direct tax and it is an annual tax. That means if the person earns a monthly income, he need not pay the tax monthly. So it is paid on an annual basis. Here the basis of the charge is nothing but the income earned by the person. So this income is assessed under section 4 here. It is levied on the total income of a person relating to the previous year. And remember, this is the tax which is levied and collected by the central government. So the state government cannot impose any type of the income tax here. And here the liability to pay the income tax is rested with the person one who earns income. Now let us look into certain important terms which are referred in Income Tax Act of 1961. Financial year here. Till you complete this BCom final year, you should forget the calendar year, because for our purpose it is the financial year which holds good here. So then what is a financial year here? Of course, a financial year is nothing but a year which has 12 months starting from the 1st April and ends on 31st March of the next year. So such year what we call it as financial year. Then assessment year. So here the section 2 of subsection 9 of the Income Tax Act defines assessment year as an assessment year is a financial year which starts from the 1st April and ends on 31st March of the next calendar year. So it is called as tax year because here the tax is levied for the assessment year on the income earned by the person here. Previous year. Of course, previous year is nothing but which precedes the assessment year. In other words, to say, it is the year which comes before the assessment year. So section 3 defines the previous year as it is a year in which the income is earned. So that's why it is known as a income year. It is also known as income year. Then the next comes here person. Here the person means he is the one who earns the income, and such person includes an individual, a Hindu undivided family, or it may be a company, or it may be a partnership firm, or a limited liability partnership firm, or it may be an association of persons or the body of individuals, a local authority like a municipality or gram panchayati, every artificial judicial person not falling within any of the earlier categories, maybe it may be like anything which is established by the government. It may be like universities, right? So all these they are known for as a person here. So here a person is inclusive and not an exhaustive here. So it includes everything here. Then the next comes here assessee, section 2, subsection 7. Here the assessee means a person by whom income tax or any other sum of money in the form of penalty or interest is payable under the Income Tax Act. So such person is called as assessee here. In a very simple to say, an assessee is a person who earns income and is liable to pay tax or get a refund under the Income Tax Act of 1961. So such person is called as assessee here. Then the next one comes here assessment here. So this is defined under section 2 subsection 8 here. Assessment is nothing but the method of computation of the total income earned by a person during the previous year. So such procedure is called as assessment here. So here the assessment, an assessee may be having income from the various sources. So it is nothing but the aggregation of the income and imposing or calculating the tax liability. So such procedure is called as assessment here. Then the next one comes here income under section 2 subsection 4 here. In a very simple words to say, income is nothing but anything which is earned by a person. So when you look into the meaning as given in the act here, it says income is a periodical monetary return with some sort of regularity. So here there must be regularity of the receipt of income. So that is called as income here. So here the section 2 subsection 24, it includes several things under the meaning of income. It may be like a profits and gains, or it may be like a salary, or it may be like a dividend, or it may be like the profits in lieu of salary, or it may be like any type of the allowances received by the person, or it may be like say for example the value of any benefit or the perquisite obtained by any representative assessee or by any beneficiary, or any kind of rent received. So there are so many things that will come under income here. Then the different heads of incomes. An assessee may have income from the different heads. They are totally in 5. So income from salary, income from house property, income from business or profession, then capital gains, then income from other sources. Then the next one comes here agricultural income here. Of course, India is being an agrarian country. Any income earned by way of agricultural operations is totally exempted under section 10 subsection 1. Then what exactly meant by an agricultural income? So which is defined by section 2 subsection 1a here. Agricultural income is defined as any rent or a revenue derived from a land which is situated in India and is used for agricultural purposes. Here any rent or a revenue derived from the land, it may be like a sale of a standing crop, or it may be like say for example sometimes the person might have given the agricultural land on a rental basis for the purpose of cultivation, and if he receives the rent from the tenant, that is also considered as income from agriculture. So any rent or revenue derived from a land which is situated in India and is used for agriculture purposes. So this is most important. Suppose say for example an agricultural land is provided for the purpose of conducting any fair, and the rent received by the farmer for letting this such land is not considered as agriculture income. So the land must be situated in India and it must be used for agriculture purposes. Here agriculture purpose is nothing but a tilling of the land, sowing of seeds, etc. So all these are considered as agricultural operations here. Then The agricultural income may be any income derived from such land by agricultural operations, including processing of the agricultural produce raised or received as a rent in kind, so as to render it fit for the market or sale of such produce. So here, say for example, drying of tobacco leaves, even it is considered as agricultural operations, or it may be like a curing of coffee seeds, or it may be like a ginning of cotton, etc. These are all the processes ordinarily employed by the cultivator to make their produce marketable. That means, so when they conduct such processes, then only the product is a fit for sale in the market here. So such process is also, so any income derived from such process, that is also considered as agricultural income. Then any income attributable to a farmhouse, subject to the condition that the building is situated on or in the immediate vicinity of the land and is used as a dwelling house or a storehouse or other outbuilding. So in this case here, suppose if there is a farmhouse which is meant for storing the agricultural produce, or it may be acted as like a godown, etc., then in such case the rent received from such land is also considered as income from agriculture here. So there are instances where the income is considered to be as agricultural income. It may be like a rent from agricultural land, or profit on sale of a standing crop or the produce after harvest by cultivating owner or a tenant of the land, a compensation received from an insurance company for the damage caused by hailstorm or to the green leaf forming the part of the associate's tea garden, or it may be like income from growing flowers and creepers, or it may be like a salary received by a partner for rendering services to a firm which is engaged in agricultural operations. Then it may be like a weighing charges collected by a landlord from his tenant in addition to a rent in kind under the agreement with the tenant. Income from any process ordinarily employed to make the agriculture produce a fit for the market, such as like a drying of tobacco leaves, or curing and drying of coffee beans, threshing and winnowing of food grains, etc., or even grazing fees realized, even that is also considered as income from agriculture. Or it may be like conversion of coconuts into copra and retting husks, even that is considered as agricultural income. There are certain things where it is not considered as agricultural income. It may be like interest on arrears of rent in respect of the agricultural land, or it may be like annuity received by a person in consideration of transfer of agricultural land, income from salt produced by flooding the land with sea waste, then interest received by a money lender in the form of agricultural produce, commission earned by the landlord for selling agricultural produce of his tenant, or it may be like income from stone quarries, income from mining royalty, income from markets, then income from the land used for storing agricultural produce, income from self-grown grass, trees or bamboos, income from fisheries, income from dairy farming, income from poultry farming, income from sale of gur produced from sugar cane by doing some manufacturing process, income from the sale of ginned cotton, income from breeding and rearing the livestock. So all these cannot be considered as agricultural income. Even the price received from the government for a higher yield, sometimes say the government may provide the awards and cash prizes to the farmer for a better crop. So even that price is not considered as agricultural income. Then the next one comes here, the casual income. Here casual income is nothing but an income which does not have any guarantee. In other words, to say, casual income is an accidental one without any stipulation. So such income is called as casual income. So the examples for the casual income may be like income from lottery, or it may be like income from betting. That means the earning of income is because of taking the chance here. So that's why it is called as casual income. Suppose, say for example, it may be like income from any type of TV game show like Kaun Banega Karodpati, or it may be like winning the award from Saregamapa or dance or any dance shows, etc. So here such income earned by the person can be considered as a casual income. So that means the participation does not guarantee of the earning of the income. Then the next one comes here, total income. So here the total income is nothing but the aggregation of income from all the five heads, such as income from salary, income from house property, income from business or profession, capital gain, and income from other sources, after allowing the deductions under section 80C to 80U via chapter 6A, is nothing but what we call it as a total income here.